My name's Imran, and I'm one of the managers at Centra, and we specialize in locum accounts. So, what did you want to do then, like Q&A or?
So I think if you should just go through the basics of what the locums need when they first start, because we've got a lot of newly qualified joining, and they'll be watching this video as well. So I think if we go through, what are the basics of accounting that they need to know as a newly qualified pharmacist? What are some of the basic important, but very important things that they need to do before they start working and while they're working, keeping track of their invoices and making sure that they keep track of the receipts and all the claims are done properly. I know there's a few people who've reached out last year and said, look, do we really need an accountant? So I think that's a discussion we need to have as well. Why do you need an accountant? Because there's a lot of people that use apps and think that's good enough. So I think obviously I've always used an accountant for all my work and my local work since 2005. And you can save a hell of a lot of money by making sure everything that you're claiming is done properly and not over claiming or under claiming. So yes, I think I'll let you do the making a start on that one, and then we'll have a Q&A and go through anything that we've missed out.
Okay, yeah, sounds good. So whenever a locum calls to sign up, whenever a client calls, so you normally have to go through their financials to work out what would be their best route, i.e., how are they going to save the most amount of tax? Should they be a sole trader or should they go down the limited company route? We've got hundreds of locums that we do accounts for. So we don't really need to have that discussion because 99.9% of the time, it's always a limited company. Because sole trader is for those people where they're starting a new business, which would be majority of newly self-employed people where they're starting a business from scratch. So with those type of businesses, you've normally got like startup costs. You might have to, invest in machinery, or a space where you need to work from, right? Rent out a unit or office space. You've got to buy equipment and all of these kind of costs. So it could be 10, 20, 30, 40,000 pounds you've invested into that business. So then you really need to go through all the numbers to work out at which point will this business become profitable. And that's normally the point at which you'd want to make a limited company. But for locums, it's very simple. Especially for the pharmacist, the costs are not that much. GPHC is £257, DBS, PDA, RPS payments. These are all very small payments. So, for £300, £400, £500 are your startup costs, and outside of that, you'll be into profit. So that's why with locums, we always say form a limited company day one before you even do your first shift. And the first shift thing is because what you don't want to do is provide them with bank details, like say for a current account, and then you start giving this to all the agencies and pharmacies, and then a few weeks later you speak to an accountant and realize, oh, I should have a limited company. Once the limited company is formed, you then have to open up a business bank account. You would then have to let all the pharmacies and agencies know, okay, sorry, I've got new bank details now. And I just can't see them being that happy with having to now go back in and do more admin work when it could have just been done one time at the beginning. So that's why we always say before you do a shift, it's best to have the limited company in place, have your business bank open, which has to be after the limited company is formed. Because if you try to open a business bank account now, the first thing they're going to ask you for is your company registration number. And until the company is registered, you wouldn't have one. So step one would be form a limited company. Step two would be open up a business bank account, and then to provide that to all the pharmacies and agencies. Because the reason why limited company, you would go down the route of once you are profitable, which for locums would literally be after they've done 1 or 2 shifts, is because lower tax rates and more expenses you're able to put through. So overall, you save literally thousands of pounds going down the route of a limited company route over a sole trader route, because you've got through the limited company, you've got no national insurance to pay. You've got a lot lower tax to pay of 19%, whereas sole trader will be 20%, and then that will go up to 40% once you cross over £50,270, which majority of locums do. Our average at the moment for locum pharmacist is just slightly over 73,000 a year. So it adds up quite quickly. You do 20, 25 shifts a month, and it really adds up. You just work out what the day rates are, and you'll see the kind of turnovers that are possible. So that's why you just want to make sure you've got the most tax efficient structure set up from day one, so that you're not having to pay unnecessary amount of national insurance, higher amount of taxes, not be able to claim as many expenses. And then if you've got a student loan, once you've gone over the 27k, you'll start to paying a student loan back. Whereas with the limited company, even if there's any student loan to pay back, it's a fraction of what you pay compared to a sole trader. So when you kind of combine all of that together, it is literally a no-brainer. It's always limited company. And if it was to be a sole trader, it would be like in a very rare situation of a locum being full-time employed in a pharmacy. So they work 5, potentially 6 days as an employed pharmacist, but yet still somehow earn less than 50,000. So they're not a higher rate taxpayer. And they only plan on doing a handful, 5, 6, 7 shifts in an entire year. If a person came and said, that's what I plan on doing, okay, in that scenario, you could potentially say sole trader would work out for them over a limited company, just because they only plan on, earning less than £2,000 in the entire year as a locum, and they're not a higher rate taxpayer either. Like from the employed job, their gross might be, say, 45 or something. In that rare situation, that potentially could work out. But other than that, majority, like I said, 99.9% is it's going to be the limited company route. In terms of running a limited company for locums, it's a lot more simpler than a person might think, because it does sound a bit daunting, running having to do a corporation tax return, running a limited company, keeping receipts and all of this kind of stuff. But for locums, it genuinely is a much simpler process running a limited company than it would be for the average person starting a limited. So if you had a coffee shop, or you were starting an Amazon or an eBay business, there's a lot more moving parts to those businesses, and therefore it can be more complicated doing the taxes for them. Locuming is almost that middle ground where you are self-employed, but there's just not that much to do on the accounting side for the locum themselves. So it is relatively simple. You were always going to be tracking your income anyway. That's a given. As a locum, you always need to formulate some kind of a system, whether it's an Excel sheet, using your calendar, your diary, some way you'd always have to track where you've worked, how much you've invoiced, and keep an eye on your banking to make sure they pay you anyway. So that part was already good. But more than often, you're going to do 1 shift a day maximum. Potentially here or there, you might do 2 shifts in a day. So even if you work every day of the month, you're likely not going to do more than 30 shifts in a month. So it's 30 invoices. So it's just not the same as a coffee shop that might have a few hundred customers in a day, or 1,000 on a weekend, and it's just a lot more to kind of track. With and they'll have like refunds. They've got destroy perishable goods, so they're making losses there. Returns and all that kind of stuff to deal with. And with locuming, that there is none of that. So it is pretty simple. Like with ourselves, when clients sign up, we provide them with a short, about 4-minute video that just explains what you need to do to remain tax compliant and tax efficient at the end of each month, to ensure when we get to the end of the year, you are paying the least amount of taxes legally possible. So, if it can be explained in a 4-minute video, it's clearly not going to be that complicated to do. So it is overall pretty simple for locums to run a limited company.
Is there anything specific they need to be aware of when, say, you get locums who will work part-time for a company and they want to work part-time as a locum, should they be registered as a limited company, or would they be better off just being sole trader?
It's very similar to just how it would be if they were a full-time locum. Very likely the answer is going to be a limited company, because with the sole trader, if they're already employed, then more than likely their tax-free allowance for the year would already be used up, and you get £12,500 or £12,570 every April the 6th to the April the 5th of the next year. That's your tax-free allowance of the year, and there's only one tax-free allowance per person. So more than likely, if you're employed as a pharmacist, you're going to be employed on more than 12,500. So if you've got a part-time, you work 2-3 days a week as a employed pharmacist, it's likely going to be above 35k. So your tax-free allowance has already been utilized. So if you then work as a sole trader, the sole trader income sits right on top of the employed income. So when you come to do a self-assessment, you have to redeclare that employed income that you receive, so the gross figure before anything was deducted from it. Don't worry, you're not going to be paying tax twice on that income, but it goes back on the self-assessment to say, this person earned 35,000 in the year as an employed pharmacist, plus they earn an additional £30,000 as a sole trader locum pharmacist, and it sits right on top of it. So straight away, all of that 30,000, if you've got a student loan, all of it will be subject to student loan, because it's already above the threshold, and it's already above the NI and the tax threshold. So you've got tax and NI, and the first 20,000 of that will be taxed at the lower rate, because that gets you up to the 50, because you've already got the 30 from employment, plus another 20 will get you to the standard tax rate. But then the last 10,000 will be taxed at the higher rate tax rate, so that's going to be 40% tax. So, and then plus you've got student loan money coming out of that, so you wouldn't even realistically see half of that money. So if you did a shift and it was £400, realistically you're only making 200 of that as a sole trader. Whereas a limited company, it's seen, because the limited company is a separate legal entity, the income is seen separately from yourself as well. So that £30,000 wouldn't be subjected to the same taxes, NI, and student loan as it would be if you was a sole trader. But those kind of situations, you do have to look at them and just go through it all just to make sure it's a limited company. But still, it would be 9 out of 10 times, it would still be the limited company route, as long as they do intend to do a decent amount of work as a locum. And the calculations that the accountants have done is even down to £6,000-7,000 when you compare if you're already employed as a pharmacist. So if you're on 30, 35, 40, the higher you kind of earn, the more obvious it is limited company route is the best route to go. But even it's shown that £6,000-7,000 as done on a self-assessment, you'd pay more tax than you would if you had a limited company.
Okay, yeah, makes sense. I think another question we get quite commonly is when you do the accounting, say a lot of the newly qualified or the ones who've been working for a couple of years, they'll want to buy their own houses, or they'll want to set up their own businesses. So when you are self-employed, obviously it's quite difficult to get a mortgage sometimes because you're not employed by a specific company. What's the best way to deal with what would a locum do if they've been working as a locum for the first couple of years? Would that have an impact on the way when they're applying for a mortgage?
Okay, so good question, and that does come up quite a lot, and it is good to kind of like clarify that situation. So in terms of like compared to employment, it's true, it's not more difficult, but it just takes longer. Minimum you need is a year worth of accounts, but we always say 2 years is better in terms of the interest rates you would get. With employment, they say it's 3 months wage slips, but it's not typically your first 3 months wage slip. So if you started a new position and you're still in a probationary period, They would need to see longer than that. So normally, typically, it'd be more like 6 months amount of pay slips you'd have to show to get a mortgage. But the amount that you would get through as an employed person is often what we see from what our locums get approved for. It's a lot lower what they get approved for, because the gross income of what you get from employment is a lot less than what you can earn as a locum. So if you're earning 80, 90k as a locum, you're going to get approved on a much higher mortgage than you would if you were employed on 45k a year. So what we see is through the limited company, locums do achieve getting a mortgage at much larger mortgages as well, especially like for people that are living like in the bigger cities. They kind of need a 3, 4, 500k mortgage, and we do see locum pharmacists being able to do that, but they do need to normally have minimum 1 year of accounts and ideally 2 years of accounts. So they could what the mortgage broker and the lenders are looking for is your salary through the limited company, which is going to be limited. It is a small amount of salary for tax efficiency purposes, plus how much dividends, i.e. profit, you take from the business. So if you knew next year or the year after you're going to be looking to get a mortgage, then whenever you get to the end of your company year, you do want to declare all the profits that are in your business as dividends and then take them into your personal account, because then that will be seen as your personal income, and then that would be the money that the mortgage would be based on, which is normally 4.5, 5 times that amount is what the bank would be looking to borrow you.
Okay, so let me just get this right. So after paying your taxes, you take all the money from your business account into your personal account, did you say?
Yeah, so when we calculate the taxes, we're basically going to give you 3 figures. We're going to give you your tax figure. We're going to let you know if you've already taken any dividends out so far. If you've taken any profit out of your business already during the tax year, we would let you know based on the figures, based on your bank balance, it looks like you've already taken X amount. But we'd also let you know how much more profit there's still left after the tax bill's been paid. And then you would decide at that point, do I want to take any more? Do I want to leave it? And that all just comes down to what your situation is, what you plan on doing. So if you plan on getting a mortgage, you kind of would need to take as much dividends as you can, ideally, or all of it, depending on what size of a mortgage you want to do. So one of the locums last week, she's only looking to get a mortgage of £170,000. So she didn't need to take that much. So what she'd already taken was more than enough. She didn't need to take additional. So she still had another 40,000 she could have taken in dividends, but she just didn't require it. It's a very small mortgage she's looking to get. Well, on the other side, we have a locum pharmacist, husband and wife, both pharmacists, but they'll be looking to get an 800, 850, 900,000 pound mortgage. So then they do need to kind of take all the profits from their business, declare that on their personal tax return, and then that would be considered their income on which the banks would base how much they're going to borrow them.
Okay. And say buying a house aside, how much can you take out from your limited company accounts at the end of each month?
So on a month-to-month basis, basically, ideally, you'd want to take it at the end of the year. So you'd want to take it at the point where you're able to have control over what is going to be then the repercussions of the amount that you take. So how much student loan would I have to pay back if I took this amount? How much tax am I paying on my self-assessment for declaring that money? So at that point, you'd ideally want to have that conversation at the end of the year. But to have that conversation, you have to have not taken the money. If you've already taken the money, then it's not really a conversation, or we can let you know this is what it's going to cost you for what you've taken. But if a person can't and they do need to take dividends each month, what we normally say is take up to 2/3 of whatever you earn a month to ensure that there's more than enough in the account to run the limited company and to also pay the taxes when you get to the end of each year. So if you're invoicing typically £6,000 a month, we'd say take salary and expenses plus dividends of about 4,000 each month, and leave 2 in the account to cover taxes when you get to the end of the year, plus any business related expenses you'd have throughout the year.
Okay. Just a question from Nick. What's the process and cost to set up a limited company?
So with ourselves, we don't charge for forming a limited company. We do the application for free, but basically just to make sure that it's set up correctly, because often when clients have done it themselves, either the SIT code is incorrect or the share split's incorrect. So then you're having to go back into Companies House and correct that. So we form it for free, but in terms of the government, they increased their prices. So for many, many years, it was £12. But on the 1st of May this year, they increased that to £50 now. So it is £50 to register a company. So at the end of the application, we would pay that £50 on your behalf and then just invoice that to you.
Okay. And it's yeah, so you guys want to do it for yourself. Does anyone have any other questions they want to ask? Really quiet day today. No one's everyone's got all the questions sorted out. Right. Anything else we need to be aware of as a newly qualified locum pharmacist?
Just basically having that the most tax efficient structure set up from day one. So speak to whichever accountant you're going to sign up with and go through the options of, typically I'm going to be earning X amount. We always give the example on 50,000 because we believe that to be the minimum a locum pharmacist would want to earn in a year. If you're genuinely working as a full-time pharmacist and you're as a locum pharmacist and you're not hitting 50k, probably debatable if it should continue as a locum anyway, because it may be better off just being employed if you're earning less than 50. So our figures are always based on 50, even though at the moment our average locum pharmacist is earning just over 73. But on 50k, if you did it as a sole trader, the sole trader tax bill comes out roughly around about the £16,000 mark. It's quite high. And if you do it through the limited company tax bill usually comes out around about the 6k mark. So it's about a £10,000 difference on 50,000.
Saving, yeah.
There's a huge saving. So that's why we always say, go through those figures, at the beginning, make sure whichever firm you're signing up with is definitely signing you up to the most tax efficient situation for yourself. So, getting that limited company form, getting the business bank account open, day one before you do a shift does really help just to keep everything organized on your side, so that you're able to make sure that from day one you're giving the correct business bank details to the employers, pharmacies, agencies, getting paid into the correct account. So that way, if there's ever an audit further down the line, all of your transactions happened in just one account. They weren't mixed, from you started here, then you went to there, and that kind of stuff. So we just say, just getting that correct structure. Other than that, the day-to-day, there isn't that much to do. With ourselves, we found the simplest way to track income was through Excel. So we tried all the softwares, and there was just a lot of learning curve, a lot of questions being asked, and they were quite confusing and stuff. So in the end, Excel, everybody knows how it works. So we just provide you with a simple Excel sheet. The locums that we used to do it on a month-by-month basis. So the original sheet used to be just give us the total of how much you've earned each month. But listening to the locums, they preferred to be able to input the figures on a daily basis, whereas we thought they wouldn't want to do that. They'd just want to sit down at the end of the month. So even the videos we provide, they just say, look, 10, 15 minutes on the last day of the month, sit down, tally up your figures, put it on the Excel sheet, you're done for the month. Locums have turned around and said, we want to be able to put the figures in on a daily basis. So I said, okay, so then we redid the sheets, and now you can input them on a daily basis as well. Or you could just tally up at the end of the month and put the total down. Both options are available, but majority of the locum pharmacists, we're requesting to be able to add the mileage and the income on and down as a daily basis. So whenever they send out the invoice, they'll just put it straight onto the Excel sheet, and that'll just keep a tally for you for the whole year. And then you just email that in at the end of the year, and the accountants will calculate the taxes as low as legally possible for you. But it is pretty simple. Also, all we basically require is the locums to input their income, mileage, and any expenses onto the Excel sheet. And any letters that come from HMRC or Companies House, send us a copy of them, whether it's email, WhatsApp, whatever's easier for you. We'll accept either one. Send it in. We'll deal with whatever the letters contain. We just need a copy from clients. So we try and keep it as simple as possible.
You have a group on Telegram, don't you?
We do, yeah. So we have a group on Telegram. We post on there once, twice a month with whatever relevant information applies to the locums, each month. So if there's any kind of additional expenses they're able to claim, we'll let them know through Telegram, or whenever there's payments due to HMRC, a reminder, we'll put it on Telegram.
Okay, that's great. And How much do you charge to for limited company accounts?
Limited company accounts, so we would be doing the limited company accounts, the limited company tax return, the self-assessment when it's due, and run a payroll for the clients. Our yearly fee is 699, and it's fixed until the end of December 2028. So it's fixed for quite a few years at that price.
Okay. And how much do you charge for sole trader accounts?
Sole traders 299.
299. Okay, that's fine. Just got a really few questions coming in now. What's your charge for the whole accounting year? I think we've dealt with that just now. If you're an employed pharmacist of 42K and planning to locum to go over that amount, are you recommending that you open limited company?
So employed locum on 42,000.
Yeah.
What did it say about how much are they looking to locum?
So if you're an employed pharmacist for 42,000, so they're only 42,000 per year as an employed pharmacist, and then they want to start locuming. So suppose it's going to go over 42K. So it's quite difficult to say how much they're going to earn in the year if they're newly qualified. But what would you say is a threshold at which point they should be registering as a sole trader, as a limited company, as opposed to sole trader?
Yeah, when you look at the figures, honestly, even £3,000-4,000 as a locum already when you're earning 42,000, when you put that on a self-assessment, because especially if you've got a student loan as well, the tax would be a lot higher than if you did it through a limited company. So that's
Okay.
why I always like 9 out of 10 times limited company. It
Okay.
can overall save you a lot in tax. And on average, full, because we have plenty of locums who are have either gone back into study and they just locum on the side. So every time they get holidays, they'll just locum in that period. Or we've got people who are full-time employed Monday to Friday in the NHS doing bank work, and then on the weekends here or there they'll locum. But even then, they'll still earn about £10,000 to £12,000 in a year. It still does add up quite quickly, even though the time is limited for them, like how much they can earn. It still, because of the rates, it still does add up. Because they're not desperate, because they've got a full-time job, they can hold out for good rates. So when they get a good rate, they'll take it. If they don't, they'll use their weekend in different ways. So, but it still does add up.
Okay. In general, should limited companies be expected to pay less than 10% of turnover as corporation tax each accounting year?
But you couldn't say, like, you put a figure on it to say, oh, it's going to be less than this amount of your turnover, because it all comes down to the level of expenses you've got. But what we always ensure is that the accountants will go through all of the expenses to make sure everything is being claimed. Therefore, the tax is as low as legally possible. When you specialize in certain fields, you know what to look for, because surprisingly, locums will send in an expense sheet and miss off their GPHC membership. Their indemnity insurance won't be there. Their DBS won't be there. They just like then you ask them, did you have any other professional fees? Oh yeah, we had paid RPS, we paid
TPC membership fees as well.
Yeah,
But
it won't be on the expense sheet though.
Yeah.
So that's why you always have to check with them to make sure. But yeah, ultimately the tax bill will be as low as legally possible. You couldn't exactly just put a figure, just say yeah, it'll be 10%.
So I think I've seen a lot of accountancy firms, especially new ones that popped up over the last few years, that have promised locums that they can pay like less than 10%. Some have gone down as low as 5%. So if an accountancy firm is promising those kind of figures, I'll probably stay away from them. They might come across as cheap, or they promise you a lot of things, but ultimately, as a director, you're responsible. And if the HMRC finds you guilty of tax avoidance, that's a professional issue as well, because GPHC will want to know whether you've been found guilty of tax avoidance. And if it's criminal, if you get a criminal record from it, then you'll probably lose your license to practice as well. So, in terms of paying, I've been locuming since, well, I've been registered as a locum limited company since 2005. Mine varied quite a lot. Sometimes if I close to 100,000 or over 100,000, I paid a lot higher tax than 10% purely because of the income and the amount of expenses I've had relative to how much I earn. And sometimes it was less than 10% because of all the expenses I've had. So it should make sure you just get all your expenses in there and make sure you've made a note of all the incomes and expenses and mileages properly, because I think with mileage, instead of claiming for a car, it works out more beneficial if you just claim the mileage. First 10,000 you claim at 45 pence, the rest you claim at 25 pence, I believe, right? After 10,000 miles.
Yeah,
Yeah.
that's and then
So
the 10,000. So whatever the mileage is above that, it'll be at 25.
yeah. So I mean, some years I used to do 30, 40,000 miles. And this is genuine miles of me locuming all over the place. So, you can claim quite a lot more back by just claiming the mileage than to buy a company car.
Yeah, just touching on what you've just said there, though, Toydal, in terms of the 10%, 5%, whatnot, it is the locum's responsibility when it comes to the end of the year to make sure what is being put through, because whichever accountant you sign up with, they will send you a copy of, whether it's a self-assessment or it's the corporation tax, they will send you a copy of the accounts, and you do need to check through it carefully. So in the past, we ourselves have said 10% of the turnover, because that is like what our aim would be, to get your tax down to that kind of figure. But you can't guarantee it though. But just from doing so many locum accounts, the average is somewhere around that kind of a figure in terms of what the return would be. But anybody that's saying 5%, there's literally no chance. So you do need to carefully look through your accounts at the end of the year, because ultimately you're signing those accounts off and you're the one that's legally responsible for them. So for the next 6 years, anything happens, HMRC audits, and there's anything that's been put through to get that figure down to that 5%, and you've signed off. So you couldn't claim ignorance. You could say, oh, I didn't really look at the accounts. It won't make a difference. It's a legal document. You've signed off on it and the accountant submitted it. You're the only one legally responsible for that, not the accountants. So always be careful who's promising you very kind of low tax returns, because ultimately to get it to those kind of figures, potentially things could be put through that you've actually not said to put through, but they kind of just done it on your behalf to get it to the low figure. So if you're only going to just look at the tax figures, so say for example you did £100,000 turnover, and they just sent you the accounts and said your tax bill is going to be £5,000. Obviously, a person would be happy with that. But generally, there's no way to get that to £5,000 for a locum pharmacist. Other trades, you could even potentially get it to zero just because of the amount they've invested into a business, but not with locum accounts. Look at your day rates, look at what your genuine expenses come to, deduct all of them off. It's just not going to be that low. Now, it will be low compared to what employed people pay for that same income. It could be 3 times less than what employed people pay, but it's still going to be a fair amount of tax to pay if you are earning 100k. So, but you do need to make sure you carefully look at all those expenses that have been put through and make sure nothing extra has gone in there to get that figure super low.
Okay. Next one is quite a common one about IR35. If you're working in the community for the same pharmacy but as a locum, can you still set up as a limited company? And what is the rule regarding IR35?
So IR35 basically is just where HMRC wants to ensure that the person isn't using their limited company to keep the taxes down, but in reality they're just working like a normal employed person, meaning Monday to Friday at the same branch, working there day in day out. They don't locum for anybody else, and they only locum for one pharmacy. Then clearly they shouldn't have a limited company, and they're just taking advantage with the limited company of paying a lot lower tax than they would through employment. They really should be on PAYE and be employed. So that's all HMRC is looking for, the people who are doing that. Genuinely, majority of locums, I could honestly say, out of all the hundreds of locums we've got, couldn't think of a single one who would do that, because ultimately when people become locum pharmacists, they do it so that they can earn as much as they possibly can in the least amount of time. And the only way to do that would be to keep the competition by working for whoever will basically offer you the most. If you just stuck with one firm day in, day out, you'd see slowly they will realize this person doesn't work for anybody else. And slowly, the rates would start to come down for you working with them. They're not going to start increasing them. If they started you off on £30 an hour, you stay loyal for them for a year, they're not going to reward you for that loyalty and make that £35 an hour. It's only going to go one direction, which is down. So That's why locums don't tend to do that. Locums will travel here, there, and everywhere for whoever is willing to pay them the most. So they do typically work like a self-employed person should. So IR35 we have not found to be a problem at all, and neither realistically have the pharmacies. Hence why they are still willing to pay into limited companies. Whereas if they had, then you would all be sole traders now. So they know themselves. Nobody's loyal with them. Boots knows that. Tesco knows that. Wells knows that. Locums will work whoever's paying the most. So we haven't found it to be an issue. The only change that happened in 2017 with the public sector and 2020, but then got delayed to 2021 with the private sector, was just that now it's down to the employer who decides if you're inside or outside IR35, because IR35 has been around for 20, 30 years, it's been around a long time. It's just before then it was down to yourselves who would choose. So obviously, naturally, everyone would just say, I'm outside of IR35, even if they were working for just one single branch, they would just each year say, yeah, I'm outside of IR35. So that power's been taken away and it's now down to the employer. So ultimately, realistically, it's not something for a locum to worry about now, because it is the employer who would do the assessment to see if you fall inside or outside of IR35 anyway. But majority of locums just do naturally fall outside of IR35, just because they will sign up with as many agencies as they can, directly with as many pharmacies as they can as well, so that they're able to have kind of that choice, that pick of the best rates. Like the more places you're signed up to, the more offers you get for work, you're able to kind of cherry pick the ones where you're going to work. So by doing that, you're putting yourself outside of IR35.
Okay. If you started as a sole trader, can switch limited company halfway through the financial year, will that complicate the tax figures? And do we need to contact every company we work for to check if they're operating inside or outside the IR35?
In terms of contacting the companies, they don't need to do that, because the companies, is their own responsibility to check that for yourself. So when they're signing you up, they'll be doing their own assessment to ensure if you're inside or outside of IR35. A majority, literally every single pharmacy puts you outside of IR35, apart from Venlog, who they're not putting you inside of IR35, but Venlog agency, which is Lloyds and Morrison's, they just don't pay into a limited company. So they're not really saying they're putting you inside or outside of IR35, but realistically they're putting you inside of IR35, because they won't pay you into a limited company. They'll only pay you as a sole trader, which you're paying a lot more higher taxes, NI and student loan by doing that. Hence why people avoid working for Lloyds and Morrison's and basically don't sign up to Venlog. But in terms of, is it complicated switching from sole trader to limited company? Absolutely not. It just means whatever a person's earned so far, so whatever you've earned from the 6th of April this year up to the point your limited company is formed, next year that income would be declared. So far, if you've earned 15, 16K as a sole trader, come next April, that's what will be declared as your income once the limited company starts. The limited company doesn't coincide with the self-assessment period of the sole trader tax period, which is the 6th of April of one year to the 5th of April the next year. The limited company is basically from whichever month you form the limited company, it will run 1 year from that point to the last day of the month. So you form a limited company any day in August, it's going to run till the 31st of August next year. And then there's 9 months from that point to get those taxes done. So it's not complicated in any way. It's just the sole trader work stopped at that point. Next year, you'll have to declare that after the 5th of April, that this is what you'd earned between the 6th of April this year and the 5th of April next year. And then the limited company would start, let's say the 20th of August, and that will run till the 31st of August next year. And then that would be declared separately. But overall, you'd still be saving money. It wouldn't be as much as if you'd started in April straight away with the limited company, but still you would not want to continue as a sole trader and end up paying a lot more taxes by the time you get to April next year.
Yes, I think my advice is if you're going to be locuming, just set up a limited company. You might not know how much you're going to earn in the year, but whatever it is, it'll be a lot better in terms of tax than working as a sole trader compared to limited company. I've always I mean, when I first qualified in 2005, I had a job with Lloyd's Pharmacy as a relief pharmacist, but I still registered straight away as a limited company because I was still working I want to work on the weekends to locum. Took the first month off, and I just locum. And I think I earned around £5,000 to £5,500 in the first month working as a locum, just qualified. Then did 2 months as relief pharmacist, but I still locum on the weekends. But at the end of the year, it just worked out that I paid comparatively a lot less tax from what I've earned from September to August than what I just paid within the 2 months as an employed pharmacist. So yeah, if you're confused between sole trade and limited company, I'd say just go to limited company as a default. It's not a huge difference between £2.99 and £6.99. But the savings will more than repay, even if you just earn a few £1,000s in the year as a locum. Right, so we've got 5:47 now. We've got 13 minutes before we end. We've got another question from Alvin Chan, sorry, not Calvin. For some roles such as hospital, private companies, they are offering PAYE or umbrella. Should we just avoid these roles, which is more tax efficient if we do accept this? Basically, whether PAYE is more tax efficient or umbrella is more tax efficient. I think they're the same, my understanding. But is this still advertised as a self-employed role? If we accept PAYE, is there any other accounting that we require doing?
Well, if it's PAYE, no, because the tax is already been deducted at source, so there would be no taxes to calculate because the NHS is calculating it on your behalf and declaring it, and then giving you what's yours then. So whatever you receive through PAYE, that's yours to keep. In terms of umbrella, we always say to avoid, even though there are umbrellas that NHS will offer themselves, like, oh, you could sign for this one. Overall, whenever you look back, if you ever do a Google search on umbrella companies and HMRC, they're always cracking down on them because ultimately through employment, there is only that route, like PAYE. Yes, it's going to be a lot more tax, a lot more NI and student loan payback, but that's the choice you've made by working for the NHS. So, umbrella companies just work in a grey area where somehow they're going to get your taxes down less than what PAYE is, and they're still charging you a fee for doing that service as well. So, HMRC is always cracking down on these. They're always closing down, changing their names, reopening back up again. So we personally say to clients to avoid that. If you want to work for the NHS, some people are doing it for the experience. They want to try bank work. They want to upskill themselves or whatnot. Then fair enough. Take the hit, become PAYE, and you won't need to be self-employed. You won't need an accountant. But okay, fair enough. You pay more tax, and I still know. But you're doing it for a reason. You're trying to become, further your career or whatever your intentions are. Then just accept the, higher taxes. What is like the byproduct of it.
Okay. If you set up a limited company for locum work, but then also want to start a side hustle, should you set up a separate company for that side work?
Depends on what that side work is. So this is, like I said at the top of this conversation, normally, like majority of people when they do call, with ourselves, we specialize in locum. So majority of people we're signing up are locum pharmacists, but outside of that, we do have like Amazon, eBay guys, restaurants and whatnot. So when they call up, you do have to go through the figures. Even with locums, we've got locum pharmacists that will, we've got people that sell sports equipment as pharmacists, that sell pills and stuff like that, like vitamins, and that they've made themselves and branded their own stuff that they sell. So those you do have to go through the figures to see what kind of investment are you making, and sometimes in those scenarios it may just work out better to just be a sole trader until that business really does take off, and at that point you'd then form a limited company, which there's only one self-assessment to do anyway. So even if you had 10 side hustles, in that 699, we're doing a self-assessment for you. You would just give us the figures for all of those side businesses that you're doing, and it'll all be declared on that one self-assessment. So it's still only costing you the 699. So we would obviously track your income along the way and make sure that is the most tax efficient situation for you. So if that business does take off and it does start to make some money, then of course we would at that point say, look, you are better off forming another limited company for that. Yes, of course, that means for us that's another 699 fee, but we would only suggest that if it's going to result in saving you a lot more than 699. This is not an exercise in for us to just form as many limited companies as we can just to make the most amount of money. It has to make sense for the client. They have to be genuinely saving, thousands of pounds, not give us 699 and we'll save you £100. You do have to make significant savings to justify all the work on both ends that needs to be done.
Yeah. And I think this is the last question we'll take for now. For monies you've received pending limited company formation, can you transfer the monies without penalty once the limited company is formed?
Some of the money you will be able to transfer within this tax year. If you've earned money from outside of this tax year, you would not be able to transfer that. But if it was like, say, for example, you've worked for Venlo, who wouldn't have paid you into your limited company anyway, you cannot transfer that money over.
Okay, that's fine. And I think that's pretty much all the questions for today. Nick asked a few questions, but I think they've all been covered. What I'll do is I'll post this video on YouTube, and I'll send you the link for Imran's contact number when I share this out again. But for the purposes, Imran, if you could just post your contact number and email address on your website on the message, I think it would help everyone. Just don't copy it. But if you can't find it, just send me a message on Telegram and I'll send it over to you. And I'll send you the link for Imran's accounting group as well. So if you guys want to sign up with him, you can always ask him questions and get those, join his group and get that done. Right, so thanks guys. It's almost 6 o'clock. And if you'd like to again, if you've got any questions, feel free to post them on Telegram, and I can pass them over to Imran, or you can get in touch with him directly as well.
Yeah. If anybody does want to get in touch though, just to either text or WhatsApp, admin will pick that up and they'll get a call booked in, and then we can go through everything. And then, after that, it's your choice, whoever you sign up with. But if you just text or WhatsApp, you want a phone call, admin will pick up messages. They'll get you booked in at a convenient time for yourselves, and then we'll take it from there.
Right, guys, have a good rest of the weekend, and I'll see you guys on the network. Good night.
Thanks. Bye.